Shares of electric vehicle makers Nikola and Lucid falling sharply today, Nikola announcing plans today to issue up to $400 million of new shares. It comes a day after Lucid disclosed an intention to issue $8 billion in new stock over the next 3 years. Our next guest suggests the charge to raise cash among EV makers will intensify, with Tesla joining the pack. Mark Fields is a former CEO of Ford and Hertz. He is now a CNBC contributor. Welcome back to Fast, Mark. Great to have you.
Hi, Melissa.
Seems like it would be a very difficult environment for a company that is in need of cash in a rising rate environment.
Yeah, well, there's an old saying, how do you make a small fortune in the car industry, is you start with a large one. And when you look at these EV makers, it's a very capital intensive business. They're trying to learn, obviously, how to get up the production curve. And the bottom line is, when you look at the cash levels, the current cash levels of whether it's Lucid or Fisker or Nikola or Lordstown, they're all saying, hey, we're good through the end of 23. Well, the question is what happens after that, right? Because the question is, can they get to profitable cash flow by the end of 23 in a market where you got rising interest rates and consumers that are being somewhat stressed? So they're going to have to be forced to raise money, and you just mentioned a couple of the automakers that have done that. And they're going to have to continue to do that as they work through this environment.
Do we see a shakeout of sorts, Mark, in this space with some of these smaller or newer players, either, I don't know, going private, getting bought, et cetera?
Well, I think in some of them it's still too early to tell. They haven't even launched their products yet. Whether it's Fisker, for example, they haven't even launched their products yet. I think obviously a maker like Rivian I think they have over 15 billion of cash. They have, huge investors like Amazon with 100,000 vans on order. I think they're fine. But some of them, I think, as they start producing and as they start seeing demand for their product or lack thereof, you could actually see, some shakeout here, as you said, either some going private or some getting absorbed.
Any predictions on that?
Well, I would say it's a little bit of a poker game right now. But I think when you look at the amount of money in private equity that's available, I think there's going to be plenty of opportunity for folks that will have discussions with some of these automakers. Because if you think about it, the reason some of these smaller EV makers went public was because they needed the cash, they needed the equity, right? And maybe their banks weren't willing to go above certain levels. So as you cast out beyond 23, those needs are still going to be there. The question is, will folks want to buy their stock, or are there opportunities to take those companies private through things like private equity?
You've walked there in the past, Mark, about how you expect auto demand to remain strong, even if there is a downturn. And I'm wondering how rising financing costs for the consumer play into that. I mean, we were just remarking earlier, just a year ago, the 2-year yield was at less than 0.25% and is now, 3.5% effectively. How does that work into the equation?
Well, it's a very unique time. In normal times, as you said, if you look at the average loan rate right now, it's over $600, almost $670. That's like a mini rent payment. And when you think about the rising interest rates, that really pushes the marginal new car buyer out of the market and into the used car market. So clearly it puts pressure on that. I think the difference than any other downturn in the past is you have the automakers who have basically had a 20% drop in volumes and production and sales over the last 2 years because of the supply chain issues. And that's about the same as any recession in the past, peak to trough. So you could argue they've already had that, but I think the biggest thing is their dealer networks, their stock levels are about 40% of what they normally would be. So I think as we go into a slower economy, the automakers are still going to do relatively well because they're going to have to produce and restock their dealers. And of course, that's when they book the revenue and the profits.
Mm-hmm. So the marginal buyer will be forced up, but the demand will still remain high. It seems like it might be a little bit easier, or maybe you're not waiting as long for a new car. Are you still waiting as long for a rental car? I mean, it's hard to get a rental car these days.
Yeah, I mean, listen, the production issues are still, kind of reverberating through the industry. You see that even in the past week, some automakers announced some downtimes. And listen, it's not only semiconductors, it's a number of other parts. But I think the other issue facing consumers is because the automakers are trying to be judicious with the number of chips they have. Some of their vehicles don't have some of the features that maybe some of these, buyers of their current products have that won't be in the new ones. For example, they may not have a heated steering wheel or heated seats because they're trying to conserve those chips. But overall, I do think the demand is still there. I think the real issue is the demand going forward for EVs, particularly as you see the cost of input costs going up and a number of the price increases that the automakers have just announced over the last couple of weeks.
All right, Mark, thanks. Mark Fields.
Thanks, Melissa.
As long as the seat has a massage function.
No, you have to have
I never thought about those features. It's really interesting about the trade down, that consumers, the quote-unquote trade down, that consumers will have to make in their vehicles.
Well, and back to the point Mark made about, how do you make the small fortune by having a large fortune? I mean, Rivian may be the best capitalized and has the best partners. I mean, in the case of Amazon, you've also got a partner who's a strategic. I mean, they are truly incented to see deliveries happen, and they are a key part of Amazon's future on delivery. But they're going to burn $5.5 billion in EBITDA this year. And by the way, that number's gotten worse from expectations. They were about $4.7 billion 2 quarters ago. So that story is an interesting one, but again, not one that gets better soon.
Guy?
I'm still trying to figure out the massage function in cars. I mean, clearly my 2002 Tahoe does not have that function.
Apparently that have massage seats.
2002 what?
I don't have a car. I mean, I don't know anything about cars, but go ahead.
I will tell you, every once in a while, there's a tell out there in the equity market, and maybe I'm just wishful thinking, but the fact that NIO actually closed slightly higher today is encouraging. And listen, you take the China numbers with a grain of salt, but July, year over year, we're up 27% in terms of deliveries. That's a good thing. So I'm hoping that the N and the dawn trade showed me something on this Tuesday, not Thursday, Mel.
Yeah, which automaker do you like, if any, Court?
I've talked about this previously, but I would actually go with some of your old schools, like your Fords, your GMs. I think they're a much better way of playing this, and I do think that they're in a better position here where, yes, you're seeing Ford is starting to cut their employees because they're focusing on your electric vehicles, but they are going to be able to much better weather some of these downturns and offer a much wider array to a much wider selection of people out there, and I think that's really going to be the way of playing this. It's so much cheaper than especially all these small EV makers.